This conference will now be recorded.
Wonderful. Okay. Good afternoon, everybody. My name is Eric Feldman, as we can see here on the screen. I am from Chandler Solutions. We are your health insurance broker, your advocate in the marketplace here. Should you have any problems, pushbacks, issues, the doctor bill's not right, you haven't gotten that EOB, maybe somebody in your family lost your ID card, give us a call and let us help you with that. My fine gentleman friend right here, Doug, is your dedicated in-house account manager, so any problems, issues, or complaints, please give Doug a call. I do have his direct dial information listed on the last slide of this presentation, which is available for everybody to review at any point in time, as well as the recording that we're doing of the presentation. So, with that said, what actually went on this year? What happened? What brought us to where we are now? Well, the renewal marketplace. So our organization, in conjunction with my firm, Chandler Solutions, we performed a thorough review of the benefits portfolio. We shopped the marketplace like we will do every single year on your behalf. At the end of the day, however, we determined that our team members will benefit the most by staying with the Cigna Open Access Network. LabCorp and Quest will both continue to be lead in-network labs on everybody's behalf across all three programs, and I'm happy to report that with the medical as well as dental, vision, and life insurance, we have not made any plan changes whatsoever. Everything is exactly the same. I can't tell you how many times I come and do these meetings and I tell everybody that everything is different. So I'm glad to be able to relay that message again, that nothing has changed in terms of plan design for your medical, dental, vision, and life insurances. Network of doctors, hospitals, and labs will all remain the same. Co-pays, co-insurances, and deductibles all will remain the same for you folks. We're going to continue to provide quality medical coverage to everybody at as low of a cost as possible, and we're going to continue to still offer our base plan while simultaneously offering two enhanced benefit medical plans that if you wish to purchase for better coverage, by all means, you can certainly buy up to them. In the near future, we're going to have another meeting to discuss Employee Navigator. What this is an online enrollment platform that we're going to bring into fruition for everybody here. So you will no longer have to deal with paperwork or bugging Andrew or anybody to get any information. It's all going to be right online on a nice portal for you. You'll be able to do all your enrollments, add or drop anybody right to the online platform that we are building for you. So with that said, let's jump into the presentation, and please, by all means, feel free to ask questions. That's exactly why we're here. So, what we see in front of us on the screen, we see three different columns in maroon highlighted at the top with base, middle, and high plan across all three. Each column is representative of a different medical plan being offered to you. In addition to that, the way to read the sheet, the top white rows as they go across the page are your in-network benefits. The next set of white rows are the out-of-network benefits, and finally your prescription benefits at the very bottom as they go across the page here. So we'll start with the base product and we'll move our way across as we talk about everything. You'll notice the very top of each column, it says network coverage area, national access. You continue to have national access under all three plans, which mean that you're in-network doctors, hospitals, and labs across all 50 states. So whether you travel, you have dependents away in college, trade school, whatever it may be, you'll certainly be able to find in-network providers again, regardless of where that you are across the country. Nice. Your base product and your middle plans, they are exclusively in-network only products. You'll notice here it says emergency coverage only on the out-of-network side. A couple of points. We're going to come back and talk about out-of-network in a little bit more detail, especially as we get over to the high plan, which does have out-of-network coverage. A couple of things about this. One, don't let the fact that there's no out-of-network coverage under the base or middle plan scare you away from those two plans, and for a couple of reasons why. One, should you be traveling across the country or across the world, regardless of where that you are, God forbid you experience an acute, emergent, life-threatening situation, all emergency situations are handled as if we're back here at home at an in-network provider, regardless of where you are in the world. So the overarching message is just go take care of yourself. We're here to help you on the back end with the claims and the billing. Again, all acute emergent situations are handled as if you're back at home at an in-network facility. Additionally, beyond that, if you were to look at healthcare.gov, if you were to explore the marketplace, the way that health insurance is going nowadays in the country, these plans with out-of-network coverage, most likely in the next 5, 10, maybe 15 years at most, they're not going to exist anymore. The reason why out-of-network coverage is incredibly and prohibitively expensive to use. I'll give you a mathematical example when we get over here to the high plan as to why that's the case. With that said, I gear my presentations towards the in-network side because it's the most cost-effective way for you folks to receive your care. However, just like last year, do not take my presentation that you have to stay in the network or you have to go to one provider over the other. At the end of the day, it's your healthcare dollars. Please absolutely do what makes the most sense to you and is the most appropriate for you and for your family. So, starting over on the left-hand side with our base product here. We'll start right in the middle of the in-network portion. It's the same $30 copay to go visit your primary care physician, $50 copay for a specialist, $15 copay for your urgent care visit, $100 copay at the emergency room. I know I don't have to tell you folks that the ER is not a walkout clinic, but just to hammer it home for anybody that might not know, the ER is not your walkout clinic. Certainly you want to utilize your urgent care facilities for those items. Laboratory, x-ray, and complex imaging services, if done at your primary care doc, would be a $30 copay. At your specialist, at a $50 copay, or if it's an outpatient freestanding facility, it's covered in full, those items here on the plan. Your prescriptions, at the very bottom, same $15, $35, $75 drug card, depending on what tier your medication falls under, 1, 2, or 3. Most generics will fall under tier 1, some spilling over into tier 2. All those wonderful medications that we see advertised on television with the litany of side effects, that's going to be your top tier drug at tier 3 here. You'll notice it says mail order 90-day supply running down the bottom. These numbers that you see here are 2.5 times the numbers that we just spoke to. The $15, $35, or $75 copays are for picking up a script from your retail pharmacy for up to a 30-day supply. If you're on any sort of mail order maintenance program where you take medication on a daily, weekly, monthly, recurring basis, strongly advise you take a look at the mail order maintenance program if you have not done so already. Basically what happens, the benefit here is 1, it gets sent to you in the mail, and 2, every 3 months you'll save yourself half of one of these copays. You get half of one of the copays off every 3 months just by getting that medication sent to you in the mail. Back up top. Inpatient hospitalization, outpatient surgical procedures, 30% after deductible. We do have deductible and co-insurances on the plan. However, they are only applicable to the items that you see that say 30% after deductible. So it's our straight copays for the doc, for the pharmacy, for the emergency room, for your urgent care facility. Our deductibles and co-insurance were only going to come into play for hospitalization surgical procedures. The numbers are listed at the very top here. It's a $2,000 deductible if we are a single individual on the plan. It's a $4,000 deductible if you have any dependents on the plan. Deductibles are not a per event occurrence. This has kind of come up a lot over the past couple of years. Deductibles are rolling, accumulating totals on the year. So if I go in for an outpatient surgical procedure, let's say, and it costs me $700, I'm a single person on the base plan. Well, that's going to go against my deductible. It's reduced by the same amount. I only have $1,300 of my deductible left to satisfy on the year. That's how these work. If and when you have enough claims expenditure to reach the deductible and you've satisfied the deductible, if there's any balance on that bill, or if you go in for any subsequent procedures which would have been subject to that deductible, you're only going to be responsible for 30% of those charges, with Cigna picking up the other 70% balance. Now, does that mean, God forbid, something happens and we go to the hospital and we rack up that 6-digit bill, which is unfortunately pretty darn easy to do nowadays, does that mean we're responsible for the full 6 digits? Provided that we're either one, in the network, or it's an emergency situation, the answer is no. We're going to be responsible for our deductible, 30% of the charges after the deductible, plus any copays, doc or pharmacy, until we've outlaid a total of either $7,350 as a single individual or $14,700 if we have dependents on the plan. Those two numbers are our maximum out-of-pocket numbers. They are your upper limit stopgap. They are your protection against the catastrophic. They are an absolutely good thing to have. The vast majority of Americans never come anywhere close to reaching that max out-of-pocket, but what it's there for, again, is your protection against that 6-digit bill from the hospital. Everything that you spend on the medical plan in the network plus at the pharmacy all tracks to that max out-of-pocket number. So that $7,350 number as a single individual is comprised of your $2,000 deductible, 30% co-insurance is thereafter, plus any applicable copay. Of course, theoretically, yes, we can hit your max out-of-pocket simply by going to your primary care office doc, but 3,500 visits during the course of the year is going to be a lot to get us there. So just as an example. getting bright. Moving over to the plan in the middle. Works very, very similarly to the plan that I just described, but just the numbers are slightly different. A $15 copay for your primary care physician, $35 copay for a specialist, same $15 and $100 copays for the urgent care and emergency room, respectively. Same items are going to apply to our deductible and coinsurance in the inpatient hospitalization and outpatient surgical. The numbers are just slightly different, and I'll talk about them in a second. Lab, X-ray, and complex imaging services, as we see on the screen here, the same concept, $15 or $35 copays done at your physician offices, or 100% coverage if done at an outpatient facility. Medications, $5, $30, and $60 copays at the very bottom. Once again, 2.5 times those copays for your 90-day mail order maintenance supply. As I mentioned, the numbers are just slightly different up top here. It's a $1,000 deductible as a single, $2,000 deductible if you have dependents on the plan, 30% coinsurance thereafter. And look at our maximum out-of-pocket numbers. Incredibly deep, great benefit that you have here. $2,750 is your max out-of-pocket as a single individual. $5,500 if you have dependents on the plan. I want to make note of a little benchmarking bullet point on the bottom right-hand side of the page here. Our plans are very, very robust that you have here. They're in the upper 25th percentile in terms of design and cost, and that bears out in the copays that you see for prescriptions, bears out in our urgent care copays, bears out in the fact that we have a copay at the ER and it's not subject to deductible and coinsurance, which a lot of plans are, and our maximum out-of-pocket numbers are tremendous. Give you an example. Our own plans, we're insurance agents, work for a rather large insurance agency. Our industry is all about the benchmarks. It's all about the benchmarks. So I'm enrolled on my company's high plan as a single individual. My wife is a teacher. She's on the state plan. My deductible, as an example, my deductible is $2,500. Your max out of pocket is $2,750 on this plan. Oops. $2,750. So again, my deductible is $2,500 on my enhanced plan. I'm then responsible for 20% of the charges thereafter until the max out of pocket of $7,350. That's our enhanced plan. So just to give you a comparison for your middle plan, my deductible is almost equal to your entire worst case scenario, just to give you that example and some context for you folks. The plan on the far right-hand side, the most expensive product that we offer, again, same concept applies, just the numbers are slightly different. $20 and $40 copays for primary and specialist, same $15 and $100 copay for urgent care and your emergency room. Copays for meds at the very bottom, $15, $45, and $75 with that same 2.5-time mail order maintenance program available to you. Deductibles slightly different, $1,000 deductible for a single individual, $3,000 deductible if you have dependents on the plan, responsible for 10% of the charges afterwards until our stated max out of pockets of $3,000 and $6,000 respectively. So again, very, very robust plans. Now let's talk about out-of-network coverage like I said I would. We have out-of-network here on the high plan. If you need out-of-network coverage, if it makes you feel more comfortable to have out-of-network coverage, please, by all means, absolutely. But let me describe to you how this works. When you go out-of-network, a couple of points. First, regardless of insurance carrier or insurance plan that's brought in, you will never see a copay out-of-network. It is always deductible and coinsurance out-of-network. Furthermore, it is a wholly, completely, and separately different deductible and coinsurance bucket in the network versus out of the network. So if you've met your deductible in full in the network and then you go out of network, we haven't met anything of our deductible out of network. Good Lord, how does that keep happening? Must have a timer on this slide by accident. Okay, so let's talk about and continue to talk about the out-of-network coverage here. So like I mentioned, it's always going to be deductible and coinsurance. It'll always be different from the in-network. When you're in the network, everything is a hard cap. The deductibles are a hard cap. The max out-of-pockets are a hard cap. When you go out-of-network, I used to call it a soft cap. I'm going to be even more conservative and call it a porous cap because we don't have these protections when we're out of the network. Let me give you a mathematical example as to how this is going to work. When you go out of network, the very definition of, right, is all those providers fall out of the contractual purveyance of the health insurance carrier, can charge you anything that they want. So the way that all insurance carriers limit their liability should they have out-of-network coverage is they recognize and reimburse a percentage of what Medicare recognizes for that same procedure. So we all know that Medicare does some great stuff for our folks on those programs, but we also know they get reimbursed at a lot lower level than our private practice doctors do. So I'm going to give you an example, both in the network and out of the network, how this is going to work. I'm going to get a $10,000 surgery done on a single individual. So I'm going to stay in the network, single individual, $10,000 bill. The first $1,000 is my deductible. I've met my deductible. I now have $9,000 left on that balance. Of that $9,000 balance on the high plan here, I'm responsible for 10% or $900. So for that overall $10,000 surgery, I spent $1,900. $1,000 of deductible, $900 of co-insurance. Cigna picks up the rest of that bill. Out of network. High level, $10,000 bill, you're responsible for the full $10,000. Here's why. Let's say the Medicare equivalent to that procedure is only $2,000, hypothetical, purely. So in this example, because the Medicare equivalent of that $10,000 surgery is only $2,000, that means only $2,000 of that bill is applied to the out-of-network deductible and the out-of-network max out-of-pocket. The $8,000 that remains is a concept called balanced billing. It comes out of your pocket, out of your wallet, and has absolutely no bearing on the health insurance plan whatsoever. So this is why I say that out-of-network coverage is very, very expensive. Certainly not trying to tell you not to go out-of-network, but if you do go out-of-network and you get that very large bill, that's the reason why. So my job here today is to educate you as to why that's the case. Does that make sense? Any questions on that? I know it gets complicated. Okay. Let's talk some best practices, and then I'll open it up for any questions that may be out there. First thing I want to talk about is lab work. You notice across the board, lab services are covered in full if we use an outpatient facility, both LabCorp and Quest are outpatient lab facilities. There are other independent labs in the network, but I speak to LabCorp and Quest because they're just very, very visible across the entire country. So I bring this up and I harp on this kind of stuff. If you're at your doctor's office and they say, hey, you know what, you need to get the blood work done, okay? Go down the street and get that blood work done. That does not mean the lab is in the network. A lot of times docs co-own labs, have reciprocating relationships with labs. Their buddy down the street may own the lab. So just because they say, hey, go down the street and get that blood work done, unfortunately, it does not mean the lab is in the network. Gone are those days, due to the Affordable Care Act, the way that the marketplace is going. If your doc will tell you who's in network, awesome, hang on to that doc, because again, it's no longer their responsibility to know. It's all of our responsibility should we wish to stay in the network. So my advice to you all is find the nearest LabCorp and/or Quest facility that's most appropriate, closest to here, closest to home, closest to your doc, closest to your little one's school. Write down the name, the address, the phone number, and keep that handy on you. So if you have to go to the lab, you know exactly where you're going to go and utilize a free in-network service on your behalf. Flip side of the coin, doctors take a sample in the office. If they actually do the analysis in the office, which is a rarity these days, but if they actually do the analysis in the office, it's going to get rolled along with your inpatient charges at that point in time. However, more commonly, they're going to send it out. You've all seen those locked metal boxes out in front. You guys probably do the same thing here. Same thing again. Do not assume the doc is going to send it to an in-network lab on your behalf, but understand that you are the insured and you are the member. It is 100% well within your right to dictate where your lab sample goes. So pull that piece of paper out of your wallet or your purse. Hey, Mr. or Mrs. Billing person, please send my lab sample to this LabCorp facility. It's around the block from home. This Quest facility is around the block from work. Absolutely well within your right to do that. Additionally, I know that most folks here are registered already on mycigna.com. For those folks of you that are out there that haven't, I strongly suggest that you do so. For claims, EOBs, provider searches, and more, you don't need to be registered to do a provider search, but it certainly behooves you to do so. If we want to find a new provider, you'll notice across the top we're utilizing Cigna's Open Access Plus network. Open Access Plus network. So when you're on Cigna's website and you're doing that doc search, please make sure we select the correct network so we have that premier national base so we're not searching on a regional Texas or California network. Open Access Plus. Should you find your doc on the website, or even if you don't, it's always my recommendation to pick up the phone and give docs a call, just because docs come in and come out of networks quite often. With that said, please, I cannot stress this enough. Do not ask your docs, hospitals, or labs if they take or if they accept Cigna's Open Access Plus network. Unfortunately, you will not get the answer that you're looking for. What you need to do is ask them, do you participate Or specifically, are you in network for Cigna's Open Access Plus network? It's basically a situation of ask the right question to get the right answer. If I'm on the base product here and I say, hey, doc, do you take Cigna? And they say, yeah, come on in. And all of a sudden I get a $200 bill in the mail. Well, what the heck is going on? They take the coverage, but they're not a participating provider, and they'll bill you on the out-of-network side where you're expecting that $30 or $50 copay. So again, ask the right question to get the right answer. Finally, this has kind of come up over the past couple of years across all industries and demographics, and it's the concept of something being covered. A lot of people think, unfortunately, probably not you guys here, but most people out there in the marketplace think that just because something is covered, that it's free. And covered does not mean free. What covered means is that it's recognized by the insurance plan and attributable to the financial deductibles, co-insurance, and max out-of-pocket of the insurance plan. If I'm playing football over the weekend and God forbid something happens and I break my leg, absolutely breaking of my leg is going to be covered under my health insurance plan. I will certainly have deductible and co-insurance charges coming my way, but it'll absolutely be covered. Something like all of your preventative care in the network or your lab work done at a Quest or LabCorp facility that has no cost out of your pocket, those items are covered in full, and those items are free to you, as an example. Questions on any of this? Can I go back over anything, highlight anything, draw examples for anybody here?
One thing I wanted to mention, Eric, was I just did some quick math, and the difference, and you highlighted it great, the difference in the out-of-pocket max between the base and the mid is $4,600. The premium differential for the single is $1,092 for the year. So depending upon where you fall on the scale of healthcare utilization, throw that into the mix. So you're spending almost $1,100 more, but you're shaving $4,600 off your out-of-pocket exposure.
Right. So to Doug's point, this slide right here, so how do we pick a plan that's best for our needs? And a lot of people just say, give me the best plan, give me the best plan. Well, there is no real best plan. It comes down to each individual person's case-by-case basis. What do you have coming out of your paycheck? But not only that, think back over the past 36 to 48 months of your medical history. Obviously, we can't forecast emergency situations, but you know how many recurring doctor visits, recurring prescriptions that you have. If you have little ones that are playing sports, maybe in middle school, high school, things happen. They did to me, I know for sure. If you have any planned surgeries, if there's pregnancies coming up in the family, these are all things that we know about, which will help make our decision. So consider not only the copays and deductibles, but to Doug's point, your out-of-paycheck expense as well. You know, there's certainly a comfort factor to having health insurance, but at the end of the day, are you over-insuring yourself? Like Doug said, look at the difference from the base to the high plan, because people will just say, give me that best plan, thinking the most expensive plan is it, right? Well, that's a tremendous amount of dollars that you're spending, let's say as a single individual, just for the right to get away from $1,000 of deductible. That's how people see these plans. They say, oh, this plan has a $2,000 deductible, this plan has a $1,000 deductible, this one's definitely better. Well, not necessarily, because if you're spending an additional $4,600 or whatever that it is, over here in premium guaranteed, does that make sense to spend $4,600 to avoid $1,000? Question you need to ask of yourself. I want to go back to this slide that was very popular as I was explaining the medical plans. This is just very quickly the Cigna online member website. Again, I know that most people are enrolled, but just in case anybody isn't. Yes.
I'm sorry, Eric, can I go up?
Yeah.
On the slide. The max out of pocket is the difference between $7,350 and $4,700 on the base plan.
Yes.
For your quote unquote dependent. That includes your spouse.
Yes.
Okay.
Yes. Yes.
So no children, husband, wife, either direction of the employee here, your max out of pocket almost double.
Right. So right.
Even if only one of the two people use benefits by the additional rate.
Correct. So everything to the left, aside from the percentages, the $2 figures to the left of the slash will always be just you as the individual. To the right will just be you plus whomever it is in your family.
So despite the additional premiums for my wife, I never left as a person. If she doesn't get benefits, I have to get twice the number.
So what happens is, and that's a great question, so let's talk about this. So a couple of things. You'll notice across the top it says embedded. This is only related to people that have dependents on the plan. Okay, if you're a single individual, you can just kind of tune me out for a couple of seconds because there's no bearing on you. If you have dependents on the plan, a couple of things. One, we have embedded deductibles, And because of the Affordable Care Act, we have embedded MOOPs, max out of pocket. So,
What does that mean?
yeah, don't even. So, let's run through it. Let me give you this example here. Let's say I'm a family of 4, right? And I'm on the base plan. Something happens to me and I got to go to the hospital. So, because the deductible is embedded, right? And if you notice, the single deductible is half that of the family deductible for the first 2 plans. So, if I go to the hospital and I'm under the base product family of 4, I'm tapped out at $2,000 of deductible. Then I go into my 30% coinsurance. And because of the Affordable Care Act, max out of pockets are also embedded. So follow me here. Family of 4, I go to the hospital. I have a huge bill, $80,000 in claims, 90, whatever the heck that it is, a huge amount of bills. I'm tapped out at $2,000 of deductible. I pay 30% of the remaining balance until I hit $73.50. I'm now tapped out and covered at 100% for the balance of the year. The balance of my family together or separately can meet the difference in deductible and the difference in max out of pocket.
So the point being, no member of the family will ever pay more than the individual deductible.
Right.
And no family as a whole pays more than the
family.
14.7, correct.
Now, the other plan design out in the marketplace is what's known as an aggregate deductible.
And that's where you have to hit the family numbers.
So same scenario, I need a hospitalization. I'm in the base plan. I would need to meet that $4,000 deductible first, and then I get into my 30% coinsurance.
So for any reason, I'm the only one. So if it turns out that I'm the only one that ever used the insurance,
yep,
and I went over the 7,300, I was still responsible.
Correct. Correct.
So my kids didn't get taken away.
Right. Yep. That makes sense?
Sure.
Do you want to go back over? I can.
No.
I'm happy to.
We have it on tape. I'm gonna watch it.
Okay.
I understood it.
It's wonky. I know.
It'll get all simple with the phone and stuff.
Yes.
And then like last year, the numerosity of your children doesn't affect your cost.
Correct.
Whether you have one child or you're a Brady Bunch.
Yep.
You're in good shape.
Correct. Right. Thankfully, we have composite rates in our market segment. If we were smaller, then each individual kid would have their own rate, but thankfully that doesn't apply to us, so we're okay there. But yes, correct. Yeah, but right, as the overarching thing, regardless of the single individual is always capped out at the single max out of pockets, and the rest of the family can meet the balance of those numbers. Any other questions, folks? Anybody on the phone?
Is there anybody in the room?
Yeah, there's 2 attendees. Yep. Oh, okay. All right, so let's continue on. We can always come back to any of these slides, not a problem. Talked about this, talked about this, talked about this. Let's talk about your ancillary coverages, your non-medical insurances. Have a couple of products for dental insurance offered to everybody through the principal, going to remain the same. This is our base dental insurance. It's a nationwide network, but just like the 2 first plans on medically, you do have to stay within the network to utilize the plans and the benefits thereof. It is a nationwide network, close to 100,000 providers spread across the entire country, so you'll certainly be able to find in-network dentists regardless of where that you are. So, in the network, we are covered at 80, and 50%. All of our preventive work is covered at 80%, 20% balance our responsibility. Your basic services, your bigger ticket items, your major services, your real big ticket items, covered at 80 and 50% respectively, again with those balances being our responsibility. We do have a $50 deductible on this plan, which is only applicable to basic and or major procedures. If you go in for your 2 cleanings, your prophylactics on the year, there's no deductible asked of you, and you're capped out at 3 deductibles per family, meaning the first 3 individuals who go for a basic and or major procedure will have that $50 deductible applied to them. If nobody goes in the family, no deductibles are applied. If only one person goes, then only 1 deductible is asked for basic and major services. If, however, you need some more robust, enhanced dental coverage, we do have a buy-up option available to everybody. Actually, I'm remiss. Let me talk about this real quick. Annual max on the base product is $1,000. So what that means is that the principal will spend $1,000 per person per year towards the cost of dental, and that will reset every single year on your behalf. And everybody in your family works independently from each other. So if I went and exhausted my benefit, but my spouse hasn't used anything, she still has $1,000 worth of reimbursement from the principal to work with. The more enhanced dental option provides for both in and out of network benefits. Just like medical, it behooves you to stay within the network. Your money will go a lot further. That same balanced billing concept exists in both dental and vision as it does in medical on the out-of-network side. Same deductibles for basic and major procedures, capped out at 3 of them per family. Percentages are just a little bit different, 100, 80, and 50% reimbursement in the network versus the 80, 80, 50 that we just spoke about. You have a $1,500 max here under the enhanced plan, provides for a little extra benefit. So should you have higher instances of dental care, some extra work that needs to be done, it may behoove you to pick up this enhanced option here. Continuing.
And that maximum is not separate for in and out of network.
Right, it's combined. Right. Vision insurance, staying with VSP, Vision Service Providers, national network of about 50,000 plus independent optometrists and ophthalmologists spread across the entire country. You're eligible for an exam once every 12 months at a $10 copay. You're eligible for a set of frames once every 24 months at a $25 copay. You're eligible for a set of lenses once every 12 months at a $25 copay as well. Contact lens fitting is a $60 copay as we see here. This vision product works the exact same way that all vision products in the marketplace do, in that you're eligible for one set of lenses per 12 months. However, if you're like myself where you update your contacts every single year, but your glasses every 2 or 3 years, what have you, there are discounts and fee-saving provisions within the network to update a second set of lenses. So what I do as an example, because we have a plan that's very, very similar to this, and my eyesight is terrible, I'm going to go out on a limb and say I'm probably the worst in the room. If anybody has contacts and you know the numbers on the side of the boxes, I'm a -7. It's bad. It's like here, it's bad. So I utilize the exact same plan, right? I run my contacts through the plan because my contacts are pretty darn expensive. I have weekly disposables. I get 52 pairs of those bad boys every single year. My glasses are not nearly as expensive as my contacts are, so I use the discounts and fee-saving provisions in the network to update those lenses. You may be different, up to you completely. Just want to give you some ideas of what goes on out there. Finally, contact lenses, materials, there's the no copay just for the fitting that we see here. I wanted to
back up one thing. One question that came up not too long ago was the frequency. The time frame here is every 12 months to 24. Thing to keep in mind with vision is the time frame is based off of date of service, as opposed to the dental and the medical, which is a calendar year time period. Your $1,500 or $1,000 annual max on dental resets every January 1st. Okay, your deductible and your max out of pocket on the medical resets every January 1st. I go for frames and lenses and have an exam on February 1st. Okay, I've got to wait till February 1st of 2020 to have another exam.
So it's a rolling 12 months,
Exactly.
based on data service. Wanted to show you guys very quickly the VSP website, some information on how to access the vision benefits. Here we can find some in-network doctors, find some extra information on special offers and savings, as well as how to use the benefits. I circled it in red right up here. My editing skills aren't the greatest, so I kind of just used whatever I could. But just wanted to show you right up here in red that you can create your account listed at the very top of VSP.com.
And I'll make a comment here. I went to VSP recently. I encourage everybody, and you should be able to get to it now through the Employee Navigator, correct? The Employee Navigator,
Yep, you will.
We haven't produced it yet, but once it goes into publication, it's going to replace what we're trying to replicate on Paylocity. We can go click on things, it'll take you places or show you benefits. Now, through a web-based product through Chatler, Employee Navigator, you can get the signal, get the VSP, get the principles. You can click on things, get forms, get information about how much the plans cost, enroll if you're a new employee for Employee Navigator. Go to the VSP website. You'll see that, for instance, certain eye care center providers, for example, Osmond and Hal, where I go on the sign, is a quote-unquote preferred provider. You can get up to $200 in rebates on Bausch and Lomb lenses, contact lenses, because you went to that specific provider. So there's a lot of Easter eggs in the VSP benefits
lot of the same kind of stuff, which is why I'm also hopeful that people sign up on the My Cigna page, because, right, there's also discounts on other network stuff through Cigna as well. Talk about life insurance very quickly. The company does provide all team members with $50,000 of life insurance to begin with, so whether you know it or not, everybody has 50 grand of life insurance from the company here. Now is a great time to update any beneficiaries. A lot of times I do these meetings and somebody realizes that their ex-spouse is still their beneficiary. Assuming you don't want that to be the case, now's the time. My name is Eric Feldman. I have 2 N's in my last name in case anybody's wondering. Figuring one day that'll work. But if you wish to purchase additional life insurance above and beyond what the company provides to you, we have the ability to do so. You can also extend the benefit to a spouse and or any dependent children that you have. The only caveat under this additional life insurance is that you got to cover yourself first. So in increments of $10,000, you can elect anywhere from $10,000 up to $300,000 in this additional life insurance. For your spouse, in increments of $5,000, anywhere from $5,000 to $100,000. And for your dependent children, from $5,000 all the way up to $20,000 in this additional life insurance. If you're a brand new employee, you can still get what's called the guaranteed issue, meaning you can elect coverage up to $100,000 for yourself and answer no medical questions whatsoever. If, however, you declined this in the past and you wish to pick this up now, you can. Voluntary life insurance is the only coverage that we offer that does not adhere to an open enrollment period. The reason why it does not adhere to an open enrollment period is because if you declined it when you were either first hired or when we first initially rolled this out, we lose guaranteed issue, which means that all amounts are subject to medical underwriting. So if you declined it in the past, but you want it now, you want it 5 months from now, you want it 2 years from now, you can pick it up, but all amounts will be subject to medical underwriting. It's a 5-page, that's a 1-page questionnaire, 5 different questions.
And I'm sorry, dependency under the health insurance and here under principal is that at 26 of age?
Right. For the life insurance, it'll probably only go up to 23. Can you confirm that? But for dental and vision, it should be 26.
And health?
Yeah, and health definitely. Yes, absolutely.
And is this portable? So in other words,
Totally.
this life insurance is like your Aflac.
Yes.
It's portable. If you leave here for whatever reason, so long as you pay the premium, this lasts in this term or is it?
This is term insurance.
Term, okay.
Right. So, and
It will increase when you jump an age band.
right, they're in a 5-year age bracket.
But it maintains the group price.
But it maintains the group price, and you can see that right here at the third to last bullet point. We can port the coverage. You can take it with them. They just bill you at home. What is this life insurance good for? This is best for your short-term debts. And when I mean short-term debts, I mean student loans, car payments, mortgages, rents, those sorts of things. As an example, when I graduated college, I had 2 of these term life policies because I had a good deal of student loan debt, as you could imagine. I busted my butt and got rid of it all, and I canceled one of my term policies because I just didn't need it anymore. I have another term policy, I have a whole policy, I had a couple of things going on.
So now you're married and you have a baby on the way and you're buying a big life insurance policy.
Well, I've already got a big umbrella policy and everything, all that going too, so yeah.
and the physical and questionnaire kicks in at what marks?
So if you're brand new and you have the guaranteed issue, anything above and beyond the guaranteed issue will be subject to the medical underwriting. If it's been declined in the past, all amounts are subject to the medical underwriting.
Right, so also the additional insurance for anyone is subject to a questionnaire.
Correct. Assuming that they.
Unless you go up by $10,000, you can buy another $10,000 without any other.
Right. So if you enrolled for 10 grand when it was first offered, and today I want to jump up to 20 grand, you don't have to answer a medical question to do that, because we can see the periodic increase listed here. So that does away with the questions. But right, anybody that declined it, anybody that doesn't have it, anybody that's looking to get it now, right, will be subject to medical underwriting, assuming they're not new.
And the paper, we're doing this by paper this year as opposed to web-based. Will the paper ask these questions if you want this, or will they have to go online to do it?
So the paper is going to be the way to go, just because I don't know. We can upload docs to.
Yeah, we can.
So yeah, we can do it online. We can do it online.
Okay. Because looking at this, it just simply says, and I'm holding up here in a form that would.
So that's our form that we created. The medical underwriting form is an actual printable form that comes from them.
And that is standard industry
Yeah,
practice.
all carriers do that.
But just for logistical, for Andrew, we have to push more paper than just what we have here.
Right.
The principal enrollment doesn't have the license.
sent out, and we also, you have the grid too for per page check basis. So someone can line up the coverage amount and their age on a payroll basis to find out what that would cost per pay period.
Okay. Any other questions on the life insurance? So, we've come to the last slide. I thank you all for your patience and listening to me ramble on about the wonderful world of health insurance here. So, what do we need to finish? What paperwork to complete? So, if you are already enrolled, all you need to do is complete the employee handout that's in front of everybody here. That's going to be sent out to everybody on the phone. If you are new to the coverage, you're enrolling for the first time, dental, vision, medical, or you're adding or dropping anybody from your current level of coverage, that's the only time we'll need an enrollment form from you. If you're already enrolled and you want to continue to do so, please fill out the employee form that everybody has. If you wish to waive coverage, not a problem. Just fill out that same form that everybody has. There's a waiver box on the far right-hand side. We ask that everybody, no exceptions to this, everybody out there, please get back either an enrollment form or the employee handout no later than the 25th of this month. The 25th is a hard drop deadline. If you specifically hold up your enrollment form beyond the 25th, then you specifically will hold up the entire company from getting new ID cards. Please don't be that person. And finally, like I mentioned, Doug Belding, here is his direct dial as well as his email address listed here. If anybody can't see the screen, Doug's direct dial, 732-595-2208. Again, 732-595-2208. If you have any questions, concerns, or pushback, please give us a call and let us help you. With that said, unless there's any questions, again, I thank you all for your time and your patience this afternoon.
All right.
Okay. All right. Thanks, everybody.
Any questions from the box?
No. Anybody out there on the line? Any questions?
How many people we have there?
There's
Three.
Yeah. Four people logged in.
Okay. No questions from them. Yeah. All right. Thank you.
All right. Thanks, everybody.
Yes.